What's up, everybody? Michael Silva here, planning for the next bounce. Today's price action was quite boring overall. And remember, when things are boring, you don't want to be complacent. Tell you what, as the morning opened and gapped down, it had both bulls and bears on edge. What do I mean? Well, the bulls were hoping that we'd see some sort of rip up higher to make up for the losses on Friday. And the bears were sitting there contemplating, should I be covering or should I let this go to see my profits rise? But unfortunately, the price action just continued to go sideways, keeping them quite bored, really bored. Well, so boring. You're watching the Stock Market Brief Show. My name is Michael Silva. We got a lot to discuss on today's episode. It's going to be broken into parts. We're going to be talking about the bounce that could potentially come. We're going to get into individual stocks to watch. We're going to go into the trend, the JWAB zones, and then we're going to look at the bigger picture of what's taking place. Let's get into it. All right, everybody, welcome back to the Shizzo. Here we gizzo. Looking at the Qs, and you can see them as well, just went sideways throughout the day. A lot of chop back and forth after a gap down and finishing down 1%. So you got to understand, it was a big move to the downside today, but overall, that happened from overnight price action. If we take a look at the 11 sectors that make up the S&P 500, energy and oil was up tremendously. Utilities, consumer staples were right behind it. That is some defensive posturing taking place. Right across the board, VIX was a little bit up. Not much going on, but pay attention here. Technology was down 1.32%, so that continues to get hit. Is a bounce coming? Well, that's what we're going to talk about. I want to point out the BP charts, BP NDX. Okay, we've been getting hit to the downside, and I want to call out, right? We're at 29.83 reading here on the RSI, on the BP chart. I like to look for oversold conditions and overbought conditions to know when to potentially start to let off the gas a little bit. So for example, as we're coming down into these areas, it could be technically overextended to the downside. Doesn't mean we can't go lower. Doesn't mean it can't hold down there longer, but it's at least something to be well aware of taking place. So a bounce could potentially come. Now, BPNDX, what are the top 10 holdings in the NASDAQ 100? We have Apple, Microsoft, Amazon, Tesla, and then down the list. So we're talking big mega cap names that can also elevate the overall index and the overall S&P 500 too. If you get big mega cap names that really rule the marketplace, start to bounce and start to head higher, well, obviously that can be quite beneficial for various markets as well. Now let's look at BPINFO. This is more specifically the tech sector. This one is getting a very low reading now. It's getting down to 25.70. So careful into this area. If you're shorting into the hole, you can get lucky, but you can also get your face completely ripped off. So be very careful there. What are the top 10 holdings in XLK? If you take a look here, we'll go ahead and look. The top two, Apple, Microsoft, that is what's in common between NASDAQ 100 and the XLK. Apple and Microsoft are the part of the top two of the top 10 holdings. As you go down the list, you have NVIDIA, Visa, PayPal, MasterCard, which, by the way, Visa and MasterCard were some of the interesting setups that I was looking at about a week ago or so. I got to recheck those charts. But more specifically, because we have two that match up quite well, Apple and Microsoft on both the XLK and the NASDAQ 100, I want to dig into those specific charts into detail here on today's show. So we're going to look at Apple. So I have the weekly expected move for Apple priced up. So it's about 157.50 to the low end, and then we have about just below 170 on the high end. You can see that we were down on today's trading session to start the week, down 1.37% with an indecision candle right by the 200-day moving average. It's possible to just bounce right from that level and head up. However, if you want to be more patient and really kind of dive into a demand zone, this would require a little bit more downside momentum. And what I'm highlighting here is this green demand zone. One, it starts really at the lower weekly expected move, okay? And then prior to that, it goes down a little bit deeper to around 152.50, because as you can see here, that's where a big rally started to kick into high gear. It pulled back, then we saw 3 days of pretty powerful volume step in and went boom, 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 and it carried the price up more. So right here in this area could be a potential, if we get more of a strong move to the downside, we could very well see price either consolidate or it creates a bear flag, or we can see some sort of a bounce with Apple. So that's a key level that I'll be paying attention to here throughout this week. If you take a look at Microsoft, Microsoft has a head and shoulders type pattern, got stuck at that 200-day moving average. Relative performance looks weaker than Apple overall. So this full measured move can take us down to around this demand zone, which also lines up with the lower weekly expected move and also where this rally right here kicked in. You can see at the lower weekly expected move. First off, it started with a big gap up, and you can see there was some big volume on these days to really perpetuate the move higher. So as price comes down into these areas, there was a lot of demand creating this demand zone. So if price can come down into that area, well, it could be a potential bounce opportunity. If you haven't done so already, make sure to hit that thumbs up button. I hardly ever say this. I always forget. That is a thumb. Subscribe to the channel if you haven't subscribed already, if you like these daily type of market analysis videos. Now, to keep on edge, we're going to look at growth and value. We did get the RSI below that 50 marker. We are still below zero. So what I would like to see is I would like to be able to get into those type of names to play a bounce, but I would like to see price at the rate of change get back above zero here as well. So if price goes a little bit lower, maybe this gets overextended, like into the green area. We've seen bounces from that level. So that could be something to pay attention to. And if it crosses back up through zero after the fact, maybe we get a stronger bounce. Okay, so I'm just trying to prepare us for what can potentially take place next. Remember, it's all about probabilities. It's about risk to reward. Look at right now, we're looking at the Qs right here. Okay, so the price action on the screen is the Qs. You can see we had a big rally. Even from here to here, we're looking at around a 50% retracement almost, not too far off. So that gigantic rally, right? We're in a few days' time, we're already about retracing 50% of that move. Okay, so if we cross back up that 50% and even 61.8% retracement level could be a key level to watch if you're looking for levels of support as well. Now, I want to preface this with the overall trend. So it looks like a bounce could potentially come. We need to be prepared for that. Does it mean it's going to come? No. But it does mean that we need to be prepared for it because we're getting some overextended to the downside, right? Just like I prepared everybody for the overextended to the upside, where we're seeing that price action take place, I have to take the flip side because, well, the charts are saying to do so. But we need to pay attention to what the trend is telling us. So you got to understand this on the shorter time frame. So 65-minute time frame on the Qs. You need to understand we are below a declining 5-day moving average. Okay, so price could very well be flagging, creating a bear flag, and we could come very well from a bearish point of view, take that 297. Now, what if price wants to bounce right now? Okay, so price bounces up. Look for the 5-day moving average to hold as a level of resistance. Maybe perhaps it actually does something like this, gaps up, maybe comes down, boom, and then comes down. You can short through that level because the trend still remains down. Once we start getting back above the 5-day moving average and it starts flattening out, then I'll be talking about it being neutral and start to look for more bullish scenarios to take place. But as it stands right here, right, when we cross down, we had to do those warning shots, and we crossed down, it held as resistance, and now we're starting to see weakness. It is declining 5-day moving average. So understand that we can see a bounce, okay? If we went from where we are, 304, let me just paint this picture. If we went from 304 to 310 or 311, let's just say, let's call it 312. That would make a lot of bulls very happy. However, that does not change the current trend. That would just come to a prior area of resistance. It'd be a back test. Okay, that's all that would be. So be mindful of that. If we take a look at the SPY, very similar situation. We're kind of flagging right here. If we want to bounce up higher, imagine to see price wiggle itself up higher to potentially even around 411, 412. And I'll tell you why that's an important level here soon in the JWAP section. But that also still remains a downtrend in the shorter time frame. Okay, so we could be potentially flag up all the way to the 5-day moving average, and this full measured move of a bear flag could take us right into this gap fill and the lower weekly expected move. All right, so like I said, once we get above a 5-day moving average, once it starts to neutralize, and once it starts to start rising, then we could create more bullish scenarios. You got to understand too, the RSI is getting a little overextended to the downside as well. If we take a look at the IWM, same situation. I'm not going to be diving too much into this, but it could be flagging. It's under a declining 5-day moving average. We're going to hop right now into the JWAP. What's the JWAP? It's the Jerome weighted average price. We're taking a anchored VWAP and we're plotting it and anchoring it to every single time Jerome Powell talked. Why? Well, when Jerome Powell talks, the market listens, the market reacts. There's a lot of price action that takes place, and that is why we're doing it. Okay, so simply put, we have the JWAP, bunch of them over here with the times he talked. You can see price action doodle around, and then we shot up to the upside. I want to call out, prices coming into the JWAP zone, where we see all those JWAPs come into alignment here. Now, if you look at ES, right, so E-minis, S&P futures, it has already reached the JWAP zone, and we're starting to bounce from that level. See this little line right over here? Well, this was a Fed talk. This was the Jackson Hole Symposium. So look at where that level is. It's at 407.48. So this zone up in here, along with right here, boom, previous resistance, and you have another Jerome talking area, can very well act as a potential area to even fade to short or potential area of resistance if price wants to start bouncing up in here, okay? So that is also why we're saying pay attention not only to this resistance, but around that 407.50 level, because that is where a prior anchor VWAP is to the Jackson Hole meeting. If you take a look at the Qs are here in the JWAP zone. I know when we talked about it, when price was all the way up here, people were saying, yeah, right, ha, 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 you bear. Well, guess what? In just like a week's time, well, it fell from 335 down to around 304. So if you weren't prepared, well, unfortunate. That is very unfortunate, but we are here in the JWAP zone. Now we're trying to look for a potential bounce opportunity. Look at 309, potentially higher to around 312.50 into this prior area of support. Boom, which we broke through. Could be potentially come an area of resistance, and you have that over other GWAP. Now, anchored VWAP right over there. Now, if we start breaking down right through these main levels, we'll talk about that. I don't expect that to happen come tomorrow morning, right? But it's always a possibility. I just don't want to dig into too much of details here on this one specific video. All right, let's go ahead and look at the IWM. IWM is still way above the JWAP zone, but it is, still holding below yesterday's, the anchored VWAP on the Jackson Hole Symposium, which is about I'm just going to call it 190. It's 189.50, but it can go potentially up a little bit higher too as well, okay, to this prior area, boom, right here, which is right around 190. All right, so that's what we got there as far as JWAP levels go. It looks like it's pulling into it. It could potentially act as a level of support, right? It's a level of interest to watch. All right, let's take a look at some big picture stuff taking place in the markets. This is incredibly important that's taking place because you got to understand the overall picture on a larger time frame. We're looking at the monthly time frame. Shooting star type candle, tag the monthly expected move, which is the solid line there. The dashed is the quarterly expected move, and we both came up to those levels and it was rejected. We're trading right now below the monthly 5 EMA, which would be bearish if we close below 40.95. Now on the downside, look at a 3,900 for the monthly expected move for the lower, which actually kind of lines up with just about this gap fill, right? 390 on the SPY, that gap fill right here, and the lower weekly expected move. So if it comes down into this range, we have a monthly expected move, we have a weekly expected move, we have a gap fill, a lot of confluence for support. I don't know if it's going to get down there, like we already said, what price could potentially do, come up and then potentially hit lower, but it's going to be a key level to continue to watch, okay? So that is on the big picture for the monthly. If you take a look at the Qs, same situation. Very bearish looking candle. It'd be nice to see the month finish above 312. That's where the monthly 5 EMA is. On the downside, we're looking at about 292, 293 on the lower monthly expected move, okay? 68% of the time, it should close within that. If you take a look at the Qs on the 65-minute time frame, where's price on the lower weekly expected move? About 297, okay? And it's forming that bear flag. Like I said, if we just drown up a little bit more, we have a couple more days left into the month. We'll see what takes place. But those are some key levels to pay attention to. If we take a look at the IWM, also bearish looking candle, right? We still have some days left in the month. We're in bear market territory as we're in the red shaded area. We came above the monthly expected move. We came above the quarterly expected move, and we're below them both right now. As it stands right now, we closed at 187.24, which is above the monthly 5 EMA. So overall, the IWM small caps are outperforming, but both from a price action standpoint on all three of the indexes, those shooting star candles, if we get follow through to the downside, it does look quite bearish as it stands currently. And that does not mean that it cannot change. Okay, that's all I got for you on today's episode. Everybody have a wonderful night.